welcome to another session of Ask Doug. And I'm principal broker here at Karambee Realty. And today I've been asked numerous times about owner financing. And it's part of the change in the marketplace, more of a buyer's market than a seller's market. And because of interest rates climbing, buyers are looking for alternatives, a cheaper way to be able to get what they want. So owner financing comes into play because perhaps it might be a bit less than bank financing at the moment. So what are the options for a buyer and owner financing from a seller? So it's owner financing. It goes by a number of names. In Hawaii, we use purchase money mortgage, which could be a first or a second mortgage, or agreement of sale. Owner financing, it's all the same. Bond for title, deed of trust. It's just a simple example is you have a house, let's say you're selling it for $1 million, and there's no loan. The seller has no loan, it's free and clear, and the seller can do anything he wants. There's no bank to say yay or nay. So let's say the buyer puts 50% down in this example, and the rest by way of purchase money mortgage or agreement of sale. You could do either one. And let's say it's 5%, and it's for 5 years, 10 years. It could be any length of time you want. The seller might have, he might want his money sooner rather than later, but sometimes an owner might consider doing it over a long term so that he locks in an interest rate and might be better than what he can do in the marketplace. So maybe you do a 5%, a 6%, and lock it in for 10 years and get that income from that source. And it's secured by a house with, in this case, 50% down, pretty good risk. Banks would always go for that, love that scenario. So, okay, so purchase money mortgage or agreement of sale, which one? Well, you can do either, but if there's a mortgage and it allows for financing, then you could do either. You could do agreement of sale in that circumstance, or a purchase money second mortgage. The owner financing would be in second position to a first mortgage from a bank. However, most loans these days have a due on sale clause. Bank doesn't want to be involved with a seller that sells to someone else that they haven't done a credit check on, and theoretically puts their first position loan at risk, and have to chase the seller who may have disappeared at this point, and have a new owner which they have no contract with, but they have a first position foreclosure ability on it. Disadvantages of doing owner financing is just like a bank. The bank has same risks that you would have being a banker doing owner finance. If the borrower doesn't pay, then you have to foreclose, just like a bank would foreclose. So some people wouldn't even consider this. They would go, I couldn't stomach it. I don't want to hire attorneys and go through all that process, and it might take a year and all that sort of thing, and the cost involved in that. And then I have others that would say, let them default. I would do that every day. I pray for them to default, because you get to capture the down payment that they made, and hopefully you have at least banker parameters for down payment, which would be usually at least 20% down. And they say foreclose, this would be great. And then we get to sell it again, and maybe the second person will default, and we'll just keep taking the down payments until someone pays off the loan. So yeah, so those are pros and cons of doing that. And a seller might want the money now as opposed to later. But then some people enjoy the extra income that they receive that might be higher than they can do in the marketplace, or have something that's steady as opposed to putting it in stocks and bonds and hoping that doesn't evaporate on you. So that's something. You also want to, at the end of it, when you get paid off, to especially if you're the borrower, make sure that you have a satisfaction notice recorded. So to put on notice that the loan has been satisfied, it's been paid in full, and there's no further debt. I've come across countless times where you can't prove that it was paid off. Or worse, maybe with family, a brother may have lent to another brother. No, let's say it's the parents, lent to a child, and then they passed away, and then the other kids say, well, you never paid off, and you owe us some of that money, percentage, depending on how many children. If you have the satisfaction notice and you've recorded it, then you just get your friendly escrow company to pull that up from public records, and you can show everyone, here, this was signed, parents signed it, and the loan is paid off in full, totally satisfied, and no, I don't owe you any more money. So make sure that you do that at the very end, right? Also, part of this, I've been asked on when does title pass? So on a purchase money mortgage, it's passed immediately. Your security as a borrower is the property itself. On an agreement of sale, the title passes when the loan is paid off. So a little bit different format on that. All right, so that's a lot. That's a mouthful, I know. It's getting into banking. It's not really all that difficult. Hawaii Association of Realtors has fill in the blank forms where you put the interest rates, the down payment, due on sale, or you allow assumption, what the interest rate is. Most of these are done interest only, by the way, but you can amortize them. It just makes it a little bit more complicated, and then you have to parse out for your tax purposes your interest payments on it. But you just fill in the blanks for either one, agreement of sale, fill in the blank form, and then purchase money, mortgage, fill in the blanks. And that's what the attorney who drafts the final document and gets it recorded will use to draft the official mortgage and note for the property. Again, it's just like what the banks would do. Okay, well, if you like what you said, please like my YouTube page, and please subscribe. And if you have any real estate needs, buying, selling, or property management needs, watching a vacant home, or you need to rent a home or condo, please let me know. Keep your questions coming, and until next week. Thanks so much.